Steve who? Hard to imagine how there could be any financial news on Thursday that would be bigger than Steve Jobs resigning as Apple CEO, but Warren Buffett has actually done something more significant, arguably. Berkshire Hathaway, the investment company controlled by the Oracle of Omaha, announcing a $5 billion preferred share investment in Bank of America, the troubled lender that has been hit hard in recent weeks. Concerns about whether or not the bank needs to raise more capital to deal with all these litigation headaches stemming from the mortgage problems in 2008 and before that with the subprime crisis. Well, guess what? BofA now has $5 billion in capital thanks to Warren Buffett. The thing, though, for investors that may be looking to follow Warren's lead, which a lot of people do, they need to realize a couple things. One, Berkshire gets preferred shares, not common shares, and that's important because the preferred shares pay big fat dividends, which are enticing to people like Warren Buffett who like slow and steady growth. The average investor would not usually get this same type of sweetheart deal that Buffett did. When you look at Goldman Sachs shares are actually now lower than where they were back in September of 2008 when Berkshire made its investment then. That's because Goldman has still had a host of problems itself. This is the classic type of deal that Buffett loves. He is a huge fan of financial stocks. Berkshire Hathaway obviously owns several insurers, most notably Geico. He also has big stakes in banks like Wells Fargo, American Express. So this isn't that significant other than the fact that it shows that there are big investors out there willing to support BofA in its time of trouble. And that obviously is a good thing. But just don't go overboard and think that the crisis for BofA or maybe even other banks is over just yet, just because the Oracle of Omaha thinks it might be.